Right, so Costco, right? Everyone loves it, but
Yeah.
should you buy this stock right now?
Yeah, good question.
Well, this new report from Morningstar, these equity analysts, they think they have the answer. They break down the recent earnings,
They did.
the bull case, bear case.
Right, yeah.
They even talk about this thing called the economic moat,
Right.
which we'll get into. But then there's the big one, right?
Yeah.
That $540 fair value estimate.
Uh-huh.
Now, look, I don't care if you're stocking up on like a year's worth of ketchup or you're thinking about buying some shares. This is going to be good.
Yeah, Costco's a fascinating company for sure.
Okay, so first up, earnings, right?
Yeah.
Q1 2025.
So their net sales up 7.5%,
That's impressive.
especially now with, the economy.
Right. Everyone else is struggling. They're like crushing it.
Yeah, they're doing something right.
So what is it? What's the secret sauce?
It's value, plain and simple. When everything's getting more expensive, people want deals.
Right.
Bulk buying, low prices.
And it's working. Right. U.S. comparable sales up over 7%. I mean, that's way ahead of like Walmart, Target.
Way ahead.
So they're not just like treading water here.
Yeah.
They're taking market share.
Exactly.
The report also talked about their international growth, especially in fresh food and sundries.
Yeah, those did really well, outpacing inflation.
Essential stuff. People got to buy that no matter what. Okay, but get this. Online sales up 13%.
Wow.
That's huge.
Yeah, interesting because,
They've been slow on that.
Right. Costco hasn't exactly been,
The Amazon of bulk buying.
Yeah, but who knows? Maybe this is a sign of things to come.
Yeah, we'll see.
But for now, their strength is still those stores.
This is brick and mortar temples of bulk.
Yeah, and that 90% membership renewal rate,
Yeah, I love that.
that speaks volumes.
90% is like a cult following.
Yeah.
All right, speaking of which, this report, it talks about this wide economic moat.
Yeah.
Sounds very,
Fortressy.
yeah. So what is it? What makes Costco so,
Unassailable.
yeah, unassailable?
Well, think of it this way. They have this cost advantage
Right.
that lets them offer these incredibly low prices and still make a profit.
Okay, but how?
Like, how do they do it?
It's pretty simple, actually. I
Yeah.
mean, think about the warehouses, right?
Yeah.
No frills, just giant pallets of stuff,
Yeah.
limited selection. It's all about efficiency.
Right.
And then you add in their huge sales volume.
Right.
They have so much leverage with their suppliers.
So they basically get to call the shots.
Pretty much.
Okay, so it's
A
like,
flywheel.
right, low prices,
Bring in more customers.
which means they can buy even more.
And lower prices even more.
It's like a beautiful, terrifying machine.
And impressive.
Okay, but even the best businesses have, risks, right?
Oh, yeah.
So this report, it laid out the bull case, the bear case. What are the bulls excited about?
Well, international growth is a big one. They've proven their model works in a lot of different places.
Makes sense, I mean, who doesn't love a good deal, right?
Yeah.
Exactly, and their scale is a huge advantage, too. They're already the third largest retailer in the U.S.
Wow.
behind Walmart and Amazon, but still,
So they're in the big leagues.
yeah, that size gives them incredible negotiating power,
They can pretty much do what they want.
pretty much.
What about returns for shareholders?
Yeah, Costco has a really solid track record there. Strong profits, dividends.
So the bulls are basically saying they're growing, they're efficient, and they pay you back.
Yeah, that's the gist of it.
Okay, but what about the bears? What are they worried about?
Well, they're worried about growth slowing down, especially in the U.S. and Canada.
Those are their most established markets, right?
Right, so how much more can they grow there?
You can't just keep opening new warehouses forever.
Exactly.
Plus, there's the whole e-commerce thing.
Right.
They've been kind of slow to adapt. And now you've got, Amazon just eating everyone's lunch.
Yeah, that's a risk.
And then there's that California thing. I
Right.
mean, they get 28% of their U.S. sales from California.
That's a lot.
What happens if that market,
Uh-huh.
softens?
Yeah, it's a big chunk of their business.
So it sounds like the bears are saying, hey, growth might slow down, the competition is fierce, and you're too dependent on California.
That's a good summary.
Okay, so we've got the bulls charging ahead and the bears pumping the brakes.
That's a classic dilemma.
It is, and it makes you think, right? Do the positives outweigh the negatives?
That's the question.
Okay, well, let's talk about that $540 fair value estimate.
Uh-huh.
Because remember, that's way lower than the current market price.
It is.
So is Morningstar basically saying?
That Costco is overvalued.
Yeah, are they?
Well, their approach is focused on the long term.
Right. They're not trying to time the market.
Exactly. They're looking at the fundamentals.
Okay.
They project future cash flows, they consider the economic moat, and they factor in,
Yeah.
the uncertainty of those projections.
So they're trying to figure out what Costco is really worth.
In the long run, yeah.
Not just what people are paying for right now.
But,
Okay, so how did they get to $540?
well, they're assuming top-line growth of 6 to 7%.
Long term.
Yeah, long term.
Right.
And an operating margin above 4%.
That's pretty ambitious,
It is.
especially with all those concerns about growth.
Right.
So the big question is, do you think Costco can hit those targets?
That's where your own research comes in.
Yeah, you got to look at the data, understand the market, and decide for yourself.
Exactly. I mean, no one can predict the future, but
Right, but we can look at the
track record.
right and the the fundamentals.
Speaking of which, let's dig a little deeper into that economic moat.
Okay.
Because Morningstar says it's not just about cost advantage. There's also this thing called intangible assets.
Intangible assets. What are those?
Well, tangible assets are things you can touch, right?
Yeah, like inventory, buildings.
Right. Intangible assets are things you can't touch, but they're still valuable.
Like what?
Well, for Costco, it's things like brand recognition, customer loyalty.
Oh, yeah.
Think about that 90% renewal rate.
Right. People love Costco.
It's not just about getting a good deal, it's the whole experience.
Yeah, it's like a treasure hunt. You never know what you're going to find.
Exactly.
And there's that, like, community aspect, too. Like, you're part of the Costco club.
Right, and that's hard to replicate online.
Yeah, you can't really get that on Amazon.
That loyal customer base, it means a steady stream of membership fees.
Right.
Which gives Costco this buffer. They can keep prices low and still make money.
So it's like the members are actually subsidizing the low prices for everyone.
In a way.
Yeah.
That's pretty clever.
And another thing the report highlighted was how much of Costco's sales come from food and groceries,
Oh, yeah.
which are pretty recession-proof.
Right, people got to eat.
No matter what the economy is doing.
So even if things get bad, people are still going to be buying, milk and eggs and stuff at Costco.
Exactly. It gives them a level of stability
Yeah.
that a lot of retailers don't have. So they're kind of like a grocery store and a department store all rolled into one.
Yeah, and they're doing a good job of expanding internationally, too.
Right. The report talked about that.
They're taking a measured approach, expanding gradually, adapting to local markets.
That's smart because some companies, they just try to, plant their flag everywhere.
It doesn't always work.
Right. They don't understand the
Nuances.
the nuances of different cultures and stuff.
But Costco, they're taking their time.
So it seems like they're doing a lot of things right.
They are, but of course, no investment is without risk.
Right. There's always a catch.
So what are some of the challenges facing Costco?
Well, competition is a big one, right?
Definitely. Especially online.
Yeah. They've been kind of slow to embrace e-commerce,
And now they're competing with Amazon, Walmart, Target.
all of whom are,
Yeah.
way ahead in that game.
Yeah, it's going to be tough to catch up.
Plus, even though they sell a lot of essentials, if the economy really tanks, people might still cut back on spending.
Right, even on groceries.
And then there's that California thing.
Yeah, that concentration risk is real.
So basically, they're not invincible,
No, they're not.
but they've got a pretty strong,
Foundation.
a strong foundation.
It'll be interesting to see how they navigate these challenges.
Yeah, because the retail landscape is constantly changing.
Right.
It's like a battlefield out there.
Okay, so let's talk about how Costco manages its money.
Okay.
This is something called capital allocation.
Capital allocation.
And Morningstar gives them an exemplary rating for this.
Exemplary. That sounds good.
It is. It means they're really good at making decisions about how to use their financial resources.
So they're not just like throwing money around.
No, they're being strategic.
Okay, so what are they doing?
Well, they're investing in growth,
Okay.
both in the U.S. and internationally.
So they're opening new warehouses, expanding.
Yeah.
That's a good sign, right?
It shows confidence in their future.
They're also investing in remodels.
Right. They're upgrading existing warehouses, making them nicer, more modern.
Got to keep those shoppers happy.
Exactly.
And what about dividends?
Yeah, they've been consistently paying those, and sometimes they even issue special dividends.
Which is like a bonus for shareholders.
Right. So they're returning value to their investors.
So they're not just hoarding all the cash.
No, they're sharing the wealth.
What about share buybacks?
They've been more cautious with those.
Really?
Yeah, they prefer to focus on organic growth.
Organic growth, meaning
Expanding their business, opening new stores.
as opposed to just buying back their own stock,
Exactly.
which can sometimes be a way to manipulate this stock price.
Right. But Costco, they're taking a more long-term approach.
Okay, but what about that e-commerce thing again?
Yeah, that's the big question mark.
Because they haven't really invested heavily in that.
Right. And it makes you wonder.
Are they missing the boat?
It's possible.
Or are they just, like, biding their time,
Maybe they have a plan.
waiting for the right moment to strike?
Yeah. It wouldn't be the first time they've done things differently.
Right. They've always been kind of mavericks.
Yeah, but the retail landscape is changing fast.
Can they really afford to ignore the digital world?
We'll see.
It's a risky bet.
It is.
But hey, maybe it'll pay off.
Maybe.
Okay, so we've talked about their earnings, their moat, their growth strategy, their risks.
Uh-huh.
Now let's sidle back to that $540 fair value estimate.
Right, because remember, that's a lot lower than the current stock price.
So how do we make sense of that?
Well, we need to look at the things that drive Costco's profits
Okay, what are those?
and how Morningstar thinks those things will perform.
In the future.
Exactly.
All right, lay it on me.
Okay, so first and foremost, there's membership revenue.
Right, those annual fees.
Yeah, that provides a stable base of income.
Yeah, that provides a stable base of income.
And it allows them to keep prices low,
Exactly.
which drives sales volume,
And Morningstar's projecting that membership numbers will continue to grow.
both in the U.S. and internationally.
Yeah. So as long as people keep signing up.
That revenue stream should keep flowing.
Okay, what else?
Their cost advantage is huge, too.
Right, we talked about that.
Their efficient operations, their buying power,
It lets them offer those rock-bottom prices.
and maintain healthy profit margins.
Okay.
And Morningstar assumes that this advantage will continue.
So they'll be able to keep prices low, even if costs go up for everyone else.
That's the idea.
But there are risks, right?
Yeah. Oh.
What could derail their profitability?
Well, competition is always a threat.
Right.
If Walmart or Amazon can steal market share or force Costco to lower prices even further.
That could hurt their margins.
Yeah, even a small dip in margins
Oh, yeah.
could have a big impact on their profits.
Okay, what else?
Economic uncertainty is always a factor.
Right, even though they sell a lot of essentials,
Yeah, a recession could still hurt them.
people might trade down to cheaper brands.
Or just buy less overall.
And then there's
Ugh.
the supply chain.
Uh-huh.
I mean, we've seen how fragile that can be,
Yeah, any disruptions could lead to higher costs, shortages.
which would eat into their profits.
Exactly.
So there are definitely some headwinds.
Yeah, some potential bumps in the road.
Okay, so we've got these profit drivers, membership revenue, cost advantage,
Mm-hmm.
and we've got these risks, competition, economic uncertainty, supply chain issues,
Right.
and it's all kind of swirling around this $540 fair value estimate.
Yeah, which is based on Morningstar's long-term projection.
Right, they've crunched the numbers, factored in the risks,
And they've come up with this number.
but remember, it's a lot lower than the current market price.
It is. So what does that tell us?
Well, it seems like the market is more optimistic
About Costco's future.
than Morningstar
Yeah, investors are willing to pay a premium.
for those shares.
Maybe they think Costco can exceed those growth targets.
Or maybe they think the risks are overblown.
It's hard to say.
It was a judgment call, right?
It is.
Do you believe in Costco enough to buy the stock at this price?
Or do you think the market is getting ahead of itself?
It's a tough one.
It is.
Okay, so we've talked about pretty much everything. Earnings, moat, risks, valuation.
Uh-huh.
Now let's talk about capital allocation,
Well,
which is basically how Costco uses its money.
right. How they're investing for the future.
And Morningstar says they're doing a great job.
Yeah, they've given them an exemplary rating.
So where are they putting their money?
Well, they're investing in expansion,
Okay.
opening new warehouses.
Both domestically and internationally.
Yes.
So they're not afraid to spend money to grow.
No, they're clearly confident in their business model.
They're also investing in remodels.
Right. Upgrading existing stores, making them more appealing to customers.
And what about dividends?
Yeah, they've been consistently paying those and occasionally issuing special dividends.
So they're rewarding shareholders,
Exactly.
but they're not doing a lot of share buybacks,
Right. They prefer to focus on organic growth,
meaning
expanding their business, opening new stores.
as opposed to just buying back their own stock,
Right.
which can be a way to boost the stock price in the short term.
Yeah, but Costco is taking a more long-term view.
Okay, but what about e-commerce?
Yeah, that's the elephant in the room.
They haven't really invested much in that.
Right, and it makes you wonder.
Are they making a mistake?
It's possible.
Or do they have some secret plan
Maybe they're just waiting for the right moment.
to make a big move?
Wouldn't be the first time they've surprised everyone.
Right, they've always done things their own way.
But the question is, can they afford to be so cautious in the digital age?
It's a gamble.
It is.
A big gamble. But hey, that's what makes Costco so interesting, right?
It is. They're not afraid to zig when everyone else zags.
Okay, so big picture. We've looked at the earnings, the moat, the risks, and that $540 fair value estimate.
Which is a pretty big gap from the current price.
Yeah, so what's the verdict? Is Costco a buy or what?
Well, that's up to you to decide.
Right, we're just giving you the information.
The tools you need to make an informed decision.
So what's your gut feeling? What stood out to you the most?
Honestly, it's that customer loyalty. 90% renewal rate, that's incredible.
Yeah, people really do love Costco. It's like a cult following almost.
And it's not just about the low prices. It's the experience, the treasure hunt.
But what about that whole e-commerce thing? I mean, can they really afford to ignore that?
It's a risk, for sure. They've been slow to adapt.
And the competition is fierce.
Yeah, Amazon's not going anywhere.
And then there's that California thing.
Right, that concentration risk.
It's a lot of eggs in one basket, so it's like a mixed bag, right?
It is. There are definitely pros and cons.
But that's the case with any investment.
Exactly. There's no such thing as a sure thing.
So what's the next chapter for Costco? Can they keep growing, or are they headed for trouble?
I don't know. Nobody does.
But it's going to be fun to watch.
They will.
All right, so we've covered a lot of ground here. We've looked at the good, the bad, and the ugly.
We've given you the information.
Now it's up to you to decide what to do with it.
Do your own research. Think it through. And make the best decision for you.
Exactly. And if you have any questions, you know where to find us.
Leave a comment below.
We're always happy to chat. And don't forget to like, share, and subscribe.
We appreciate your support.
All right, that's it for this deep dive. This is Podcast Finance Daily. Comment if you have any question we can answer. Ask for like, share, and subscribe.